Good morning, everyone. Welcome to the tradingsyndicate.org, and this is our Tuesday, the 29th Globex session. I hope you're all well. Hey, Troy. Mr. M. Moran, how you doing? Hey, Raj, good morning. And good morning to the folks joining us on YouTube. Hey, aloha, Cisco. How's it? You all right, brother? Hey, Juan, how are you? Hey, George, what's going on? How you doing? Oh, boy. Well, the uptrend continues, eh, folks? Jeez. Just when everybody shorts this market, it just keeps rotating higher. And we must, well, it's probably a good thing to do a little bit of a bird's eye view here so you can see. Sometimes when you get, day traders, we're always, but if you, now market profile is what we're looking at here. This is a market profile chart. And market profile is one of the most beautiful analysis sort of techniques that has been given to us. It's been overly complicated over time. And my goal is to simplify it to help traders actually make money, right? A lot of trading circles talk and talk and talk. And we want to give people actionable advice so they can actually make a dollar or two. And that's hard. I've spent since 2012 trying to learn not only how to trade retail, but also trying to put it in terms that people can understand. Look at this market. If you take a look at a bird's eye view of it, here's Mr. Trump's Judgment Day, right? This is when he had his Judgment Day little tariff temper tantrum. And the market has done nothing but go higher, and it's had gaps, which are short positions, and it's just been a complete march higher. Sometimes you need a little perspective, right? Is my audio okay? Is it cutting in and out? Can you guys hear me? Testing, testing. Okay. All right. Oh, okay. Could be the old YouTube. Okay. So my audio cuts in and out. Just refresh the YouTube. So if you zoom out, you can see a little bit of perspective of what's going on. And the cool thing about market profile is it tells you the path of the inventory. It allows a chart, whatever kind of chart you're looking at, right? It's just a sales chart. It shows the acquisition of inventory here and the distribution of it, right? That's all markets are. They're just markets are there to distribute inventory, right? So, yeah, I apologize if I'm cutting out. It must be a YouTube problem because some people are having it and some people are not. So, apologies for that. Let's hope YouTube gets its act together. Alrighty, so we can see here, if you just took this area this sort of balance area, you can see that we're in distribution. We're in distribution, folks, going into month end. Okay, month end is tomorrow. Okay, tomorrow is month end. Thursday is the last trading day of the month. So, what does that mean for you in real world terms, right? Well, basically, it means that people who are short are going to be trying to cover. That's why, do you notice every time the market sells off, you get things like poor lows? You also have, you get a move up, right? So your trend higher, you liquidate, trend higher, right? This is, what happens in markets is when it pulls back, this is when the smart money covers. Because smart money will get trapped short sometimes, and then they'll short it all the way back down, and they'll cover because they have size, so they can average in and out of their positions. The problem is there's a lot of dumb money in these markets as well. There has to be dumb money. And they short here. So when they short into the lows, when they go to cover, they drive price higher. That's why when you're short selling, right? If you're short selling an uptrend as a position trader, now I'm talking for the larger traders in our room and who watch this, right? Hopefully this is useful to you. If you short, this is called a backfill. It's okay to short the backfill, right? If you short the back end of the move, right? This is the front end. And then what you do is you go and short the back end so you have a place to put your stop, right? You have a place to put your stop. And you short here, but you cover here, right? If you don't cover and you're expecting this, you're going to be sorely disappointed in a market that's not really built to sell off. Right? And I've done videos on why the market does not go down. It has to do with the way it's structured. It's really simple. So don't short the front end of a move, short the back end, and make sure you cover when it dips down. Be smart about it, right? Don't be stubborn. Being stubborn really gets you nothing but margin calls and no money, right? So we are still in an uptrend. We are going into month end, which is tomorrow. If by any chance we get some liquidation, right? The lows over the last couple of days are your targets. This low here and this low here, these are what we call poor lows. Wholesale trades all the time, Johnny. 24/7, brother. Right? They are the other side of our trade. Everybody has this, somebody has to lose money for you to make money. That's all nonsense, right? There's a wholesale element to this market. It's active all the time. How do I know this? Because I did business with them for 2 decades, right? So, there's a wholesale element to the market. And what their job is to provide liquidity. So they're constantly providing liquidity in multiple time frames, right? They're not trading, they're providing liquidity. It's a completely different business, right? You don't have to know a lot about it. You just have to know that it exists. And providing liquidity is providing inventory when there is no inventory, and providing bids when there are no bids. Okay? So that's the business of providing liquidity. It allows traders to get what they want in the quantity that they want at the price they want. So if there were no market makers, if you went to buy 1,000 shares of a $5 stock, instead of getting all 1,000 shares at $5, you'd get 100 shares at 5, 100 at 5.10, 100 at 5.20, 100 at 5.50, maybe 200 at 5.60. You wouldn't get the position you wanted at the price. If the market maker doesn't have the stock, he will short it to you. That's called short to retail. So you get the stock you want at the price you want. See, there's no evil shorting there, right? They are trying to get you the stock that you want. They're a delivery service. They're the truck drivers, okay, that move product. They don't make the donut. They don't create the donut. They just hand it to you, right? So that's basically a little primer on markets. Tonight, our overnight inventory is about 95, 98% long, as most of the trading is above yesterday's close, right? Yeah, so exactly. When the business is slow and price is moving sideways in a box, that's what wholesale is doing business. Exactly. They're working both sides of the box. And we'll show you that on the minute chart in just a second. So overnight inventory is long. Let's look for a correction lower. Let's see if we have one. When you split the profile, you can see we're trend up, right? Go take a look at this thing now. Let's go mark the stops. We did a look above and fail of yesterday's high. So we looked above for 2 ticks and now we're back down. So for example, if you're thinking short, you know, like, hey, I'm a short seller. Jeez, my trading software is not even open. One sec. You know, and you're wanting to short this, where would your stop be? Right? So if you were shorting this, your stop's just going to be at that overnight high. Because once you take that overnight high, you're in uncharted territory, right? We traded up here last night on Sunday night, but, you know, there's no inventory. It's all been flushed out. So be careful when you're shorting. Don't spend too much on a stop. Okay? So this is the market profile structure. It shows you these are basically half-hour candles. These letter periods are just a half-hour bar. The volume next to it shows you how much volume happened at each tick. It shows you where the inventory priced. So the overnight inventory is here. It's above the close, so it's long. And we are in distribution in the 32, 33 level, right? 70% of the inventory is priced between 26 and 29, okay? That's what they call the value area, right? So that is where the inventory cost basis is. 70% of your inventory is priced here. It is now being sold in the 31s for profit, right? Because that's how business works. Grab a bunch of cheap crap, sell it at a profit. What happens when you run out of buyers? You put it on sale and come back to cost basis. So those of you who are shorting up here, you're going to be using these areas as your stops, and you're going to be looking for these areas to break as the market comes back to cost basis as it is put on sale. Right? Very simple. Very simple. Right? It's a market. You take a product, you mark it up, you sell it for a profit. When no one wants to buy it and other people start to compete selling the same product, you put it on sale. And that is how markets work. Don't let anybody tell you any different. All right, let's go take a look at what we were talking about, the two-sided trade. So Johnny's question was that when business is slow and price is moving slowly, it'll go back and forth. That's when we draw our balance level, right? So in the old days, Johnny, if I called a market maker at this time, right, and I said, hey, what are you doing in ES? He'll go, it's pretty slow. You know, 26, 29 on both sides. What do you want to do? Which means I'm not doing much. I'm buying under 27 half. I'm selling it over 27 half, right? I'm both sides of 26, 29. I'm bored. Give me an order, right? And that's what market makers used to say. Now that's all gone because everything's electronic, right? So in the chart, kind of use the chart. I was on with Coach yesterday at Forex Analytics, and everyone was talking about news and those sorts of things. And there's a lot of stuff going on in the world. This week's going to be crazy. You got the Fed, you got NFP, you got, earnings, you've got pretty much everything's getting thrown into a pot, right? How do you know what's going on? You trust the chart. The chart will tell you everything. The chart is like that market maker that when you call and you ask, hey, what's going on in this stock? Hey, what's going on? The chart is trying to tell you what's going on. People just don't listen, right? People just don't listen. Case in point, hey, John, remember how I've always told you, John, that people always love to short the market, so I try and give them information so they can short intelligently? That's what I mean. I'm not encouraging people to take a short position, right? The only reason people would take a short is because there's a look above and fail. Okay, I'm not trying to induce people to short the market. All right? I'm just trying to tell them if you are shorting, because I know everybody's shorting, right? And I've told you this. That's a look above and fail of the previous day high. So people will short that. Okay? So I'm just trying to give them information that they can use in a tactical manner if they are short. That's all I'm trying to say, John. Right? So yeah, if you're trying to short, find a seller and sell alongside. Thank you. I appreciate that, John. So, we're starting to adjust inventory a little bit. K period came down to that G low. A little bit of front running. A little bit of responsive buying at 31 to 30. VWAP is down at 29 and a quarter. So it's a little choppy here. Do I recommend initiating a trade here? Anyone? John, since you're Johnny on the spot this tonight, would you initiate a trade here? Yeah, exactly, right? So the biggest mistake that every trader makes, myself included, is doing business at the wrong time. The chart, if you start understanding what the chart is telling you, is right now it's telling you exactly, Johnny, let somebody else pay the check. Not worth putting your money on the line. There's no follow through. And this is something a lot of traders, and I've never seen any trading room ever tell this. Distribution is a real pain in the ass to trade, right? Distribution is a pain in the ass to trade, right? Why? Because they are selling here, right? That's true. But they're selling very sort of slowly so they don't drive away the buyers, right? If you were a large seller and you don't really understand this until you've sold size, if you came in here and started banging this away with 5,000 contracts, right? All the bids would just drop. So you have to sell kind of quietly, gingerly, so you don't screw up price, right? When that happens, it's because the order flow or the flow of customers coming into the market is slow. So you can't overwhelm that order flow, otherwise you'll force price down, and all the other sellers will do the same. If I came in here with size, everybody would sell with me. Okay? That's difficult. So you sell quietly, right? And there's few people coming in, so that creates that crappy, choppy, tight range, which is not good for us. You know, we want this, right? So when the chart's all bunched up like this and it looks like a barcode off the side of a box of cereal, right? That's not the best trading environment for us as retail traders. The only way to trade this kind of action is to build positions. And we've spoken about building positions before. So say, for example, I wanted to build a short position and I was looking for inventory to correct lower, right? Now, why am I saying a short position instead of a long position? Someone's going to ask, why would I say build a short position? Exactly. Sellers are above, VWAP is below, inventory is long. Exactly. Right? Now, this is not a low risk trade. So you'd be building a short position in this area, and you'd have to use these tops as outs. So if you were building a short position, say between 31 and 33, right? And you're looking for a touch of VWAP, right? So what you'd do is you'd be building your position here, and then you'd have to use the tops of these candles as your warning signs. These are your warning lights, right? So if the market starts offering above these levels, you've got to automatically start reducing the size, right? Large traders manage risk with size, okay? So as soon as the markets went 30, 33 quarter, 33 half offered, and started taking out the tops of those candles, you'd start reducing your short position, cutting contracts, right? That is a business expense that most traders cannot afford. That's why this trade is not for people who are punting around a $2,000 valuation account. But that's one of the only ways to trade this, right? So now you see that 30 and a half bid. You want to put some bids down there at 30 and a quarter and 30 and see if you get hit. Because if you don't get hit on your bid, there's no supply at the level that you're trying to buy at. Now follow along. If you put a buy order at 30 and a quarter and that buy order does not get filled and you are short, it means that no one needs to sell it at 30 and a quarter, which means you are not going to get a fill, right? That's how you tell if your short is working, right? Traders use the execution of their orders to tell you whether the trade is working. There's a 30 and a quarter print. So there's a little bit of supply at quarter. Let's see if we can get a 30 print, right? Now, you know VWAP is at 29 quarter, 29 half, right? There. As you come closer to VWAP, you start to buy them back, right? So your position short 31 to 32, you're covering the 30s, you're covering the 29s. You have multiple contracts. You don't build a position with two contracts, right? It's 5, 10, 15 contracts. It breaks VWAP, scramble and buy some, right? Pick up the 29s. Pick up the 29 quarters, right? And you're like, JJ, that's not a lot of money. Well, 31 to 32, 33, let's say you're short 31, let's say you're short 32 average. If you're shorting 32 and you're covering 29s and 30s, it's a couple of points. On 10 contracts, it's going to add up. That's how you make money in a choppy market. It's not for everyone. You should practice it on the sim so you get used to using the software so you don't freeze, right? And then always practice it with the micro before you use the mini, right? Now, if the trade had not worked out, we'd be up at 33, 34, right? Now, for us scalpers, we're looking maybe for a look below and fail of 29, right? Which it actually did. As London opens, if London cannot take out 28 and a half, it will rotate back up. It did. It looked underneath 29, Johnny. So we looked under 29. Now we're rotating up, but you'll expect sellers here, right? And here, and here. Okay? Now we'll rip through those levels if enough people are short and start to cover. If it's a gentle short covering, it'll just kind of go sideways for a while. And that's the difference between response. Exactly. So say you were long 29, half, 30, right? Put some offers out. The opposite is when you're long, put your sell orders out, right? Because if nobody is buying your product, you're going to have to reduce the price that you're selling it at. That is commerce, right? And that's all there is to it. Now, it sounds simple. After the fact, it's simple. But the execution takes time and practice, right? But if you keep it simple, you can focus on your execution. So maybe you go long 29 half, 3/4, 30, right? And you sell into the 31s. Yeah, sure, it's not a lot of money, but you have to take the money and run. No, no, that's not the saying. If you keep it simple, that's not the saying, trade maker. It's keep it simple, stupid. You're not that you are stupid, but you're close. Just take the "you're" out of there, trade maker. That's hilarious. Uh, that's okay, not a problem. Good, I needed the laugh. Hey, Phil, how you doing? What's going on? Uh, the nice thing about using the zones that I use is, say you went long 29 and a half, 29 and 3/4, 30, using 29 as a stop. The middle of the zone at 32 is your first sort of exit. Oh, hey, Viper. Hi, Cisco. How you doing? Hope you're having a good morning. Thanks for being with us. So we have sellers at 31 and a half. Oh, my pleasure. Hey, Gustav, what's going on? Welcome to the folks joining us on YouTube as we try and muddle our way through these crazy markets. I've never seen markets like this. Well, after COVID, that was a heck of a markup. This is actually starting to become a trend now. The margin robbery, you know. COVID was the biggest margin robbery I've ever seen in my life. And what do I mean by that? COVID was a way to flush people out of their stock positions that hadn't paid for their stock in cash. And the little tariff tantrum that we had in April, right? His Judgment Day thing was the same thing, where you just drop the floor out of the market and you flush every margin player into wholesale hands. They grab all the supply and then the market just rips higher, right? The last one was violent, right? I mean, where do you have 500 points in a day? My goodness, right? But the people who paid cash for their stock, they're okay, right? Does he say that, Mike? Oh, cool. Yeah. Boy, oh boy. And someone told me yesterday that margin debt is pretty high these days. If you have some time, can you break out how the MES works in terms of profit? Oh, Okay, so the MES, each contract, every point is $5, right? So it's $1.25 a tick. There's 4 ticks in 1 point. The ES is just 10 times more. So the micro, look at this, just creep higher. Let's see if we can get a 32 print. Boom, 32 print. So the micro is like trading the ES with training wheels. It's a great product to learn with because you can get to understand the order flow, right? And if you have a bad day, you lose maybe $30. You shouldn't be losing more than $30 or $40 when you're trading the micro. If you are, it means that you're over trading and you just don't know what you're doing, right? So it allows you, it's an affordable way to learn how to trade, right? Also with these funded trader accounts, with people like our friends at Apex and stuff like that, you can pay a monthly fee, use other people's money. They make you, of course, take, evaluations, which is good because would you give somebody 5 grand to trade with if they didn't know what they were doing? Of course not, right? So it teaches you discipline. Now, futures trading is different than stock trading, and there's some advantages, right? And there's some annoying things, okay? Let's start with the annoying things. Let's get the bad out of the way first. First of all, the annoying thing is the symbols, right? The symbols are different on every frickin' trading platform. So here, it's F.US.EPU25. The other annoying thing is contract rollover, right? Right? So those are the couple of annoying things about futures trading, the weird symbols, contract rollover, but after a while it becomes second nature, right? The good things about futures trading is number one, you don't have to have $25,000 in your account to day trade. There's no pattern day trader rule. There's no PDT. There's no borrowing stock and paying borrow fees to short, right? So you just click to short, right? You don't engage any extra fees in shorting, right? It's a 23-hour market, which allows you, of course, the price action has to be conducive, but it allows you to trade on your time, time frame, which is nice. And you can open, small accounts. Did you hear they're dropping PDT to 2K? Well, glory be. Woohoo! Bring back the speculation, right? Let's rope in some more unfortunate souls. Right? So they did the PDT thing. Well, that was a long time ago because after the internet bubble, people just blew accounts like crazy, right? Right? And yeah, speculative markets, they have to keep up with all the sports wagering and everything like that, right? It's all a competition for your dollars. Oh, thanks, Futures Freeman. I will check into that. You have it listed as an under. Do I? Okay, I got to figure out how to fix that. Thank you for giving me the heads up. I'll work on that today. I didn't even know that it was listed that way. Thanks for the heads up. And now the ES is kind of stalled. We corrected inventory. We had a look below and fail. We hit that 22 to the tick. And now it seems like it's taken a coffee break. Yeah, it's 25,000 now, PDT, to day trade stocks. Now, I'm sure you guys have gotten, I hear a lot of retail stock traders, they found ways around that. But and that what that did also is that sprung up a lot of offshore brokerage firms. And the methods that we teach at the trading syndicate, you can use for swing trading too, Johnny. So you don't have to trade futures because the methods I use, this look below and fail, look above and fail, they're based on the most common, simple business practice, right? PDT, what is it? You can't take more than 3 round trips in a certain number of days unless you have more than $25,000 in your account. It's bad for retail traders because they can only take 3 trades. And it's good for retail traders because it keeps them from blowing up their accounts, right? That's why futures is a great way for newer traders to access, trading and education. Stock trading is great. There's nothing wrong with stock trading. I just like trading the same thing every day because I get to really know the market. So I know when to leave it alone. I know when to engage. I know, when my setup happens, you take your setup, make your money, and then turn off the computer. The whole trick to this business as a retail trader is keeping the money that you made, right? It's hard enough to make it. Don't go give it all back. Oh, good stuff, Johnny. So now we have a seller at 32. They're not aggressive. Let's see if we can get up and get a 32 quarter print. Oh, John, you can lose just as fast in futures. But that's really not the point. The point is which gives you access. I mean, of course you're going to lose money. You don't know what you're doing, right? Right? It's easy to lose money. I mean, I've seen people lose $300,000 in a morning trading stocks. You know, you'll have to ask that to the regulators, John. I don't have the answer to that question. All right, as we're creeping up, but I do have the answer to the offer. The offer is creeping up, which means the market has seen buyers at 32 half, 32 3/4, and it's raising price. Next place where it's going to stall out is around 33 and a quarter, 33 and a half. Right? So once again, we're trying to keep things so people can actually learn and make money, right? You're going to lose money when you're trading, right? If anybody thinks that you're just going to step into this business and start making money, you're delusional, right? And you shouldn't be doing it. It's a skill. You're going to have to learn the skill, and that's what we try and teach you. right? Everything else is all just gibberish and double talk, right? So where do you take your trade? When do you trade? When do you not trade? When you do take your trade, what's the business reason for your trade? Everything is simple and practical in what we teach in this room, right? So you won't see me getting into debates about regulation or, things that are not in my purview. I keep it to how can I teach you guys how to make some money in a practical way, right? That's all I care about, right? You're spending your time, you're investing your time, right? You want to watch regulators, go watch C-SPAN, right? We're trying to we're trying to show you how to take trades, why to take trades, how to manage your risk, how to keep your money, right? Just all practical business things, right? That's all we want to do. Right? So we have sellers at 33 and a quarter now, right? We're seeing bids. Now, as we come up to 33 half, there's a set of stops there. If they get triggered, right? If we print 33 and three quarters, then look for yesterday's high to get taken again. And we might get a run up over the established overnight high. Right? And if we get accepted over 35, just be careful on the short side because there's no inventory up here. There might be a little left over from yesterday night, but probably not. You're going to lose money. Right? That's just a fact of business. See how we didn't take out that three half, right? We didn't take it out here, right? So smart business people manage how much risk they're going to take. That's why you train on the simulator. That's why you use micros. That's why you spend time watching instead of trading, right? Because when you watch markets, you can understand, oh, I know there's going to be selling here. So if I was long at 31 and it gets up to 33 and a half, I'll probably sell 33, 33 and a quarter, take those 2 points, put them in my pocket before it comes right back to my entry point, right? If you were trading, right? Exactly. All we need now, as Moran says, we need just a few more people to short it in this area, which will create the buying to take us over 35. Well put, right? Moran, you've become a real proper villain. You like trapping shorts, right? It's like, how can we trap more people? The more people you can trap, the bigger the move you get. It's interesting. I have this one coaching student that I've been coaching for 2.5 months now, and I've just noticed that in teaching people how they sort of respond, this particular student sort of came in sort of, not with a lot of bad habits. And, I told him, if you just do exactly what I tell you, it'll work. And yesterday I did a call with him, and he had taken about 3 or 4 trades, and he traded just beautifully, you know? So it does work. All you have to do is have an open mind and actually listen and follow directions. The biggest thing I find with retail traders is they can't follow simple directions because they can't concentrate. It's hard, right? I was actually blown away by how quickly he had picked up on what I was teaching him because he didn't go look at YouTube, he didn't do other things. He did exactly what he was told, and the results were just. Now, of course, he has to keep that up, right? And get some consistency, but I was completely blown away at his results. It just simple following directions. So if you come into our room and you actually just clear your mind and can follow directions, you will achieve what you're looking for. The more noise you have, the more you go looking for a holy grail, the more difficult it is. Because the holy grail in retail trading is discipline and repetition. And nobody will ever tell you that because it doesn't sell courses and it doesn't make people a lot of money. But discipline and repetition are your holy grails to this business, right? Discipline to not make stupid business decisions and trade at the wrong time to try and force things to happen when you don't have the power to do anything, right? All of that stuff is just business discipline. In no trading course do they ever teach discipline, right? They teach you moving averages and patterns and all that crap, but they don't teach you business, some common business sense, right? You own a restaurant. Don't stick your hand in the deep fryer, right? You got to have some common sense in business, folks, right? Let's see if we can move that point of control from 27.5 up to 31 and get some distribution. It's going to be another slow night. What is tomorrow, folks? Tomorrow is month end, and what else is going on tomorrow? Should I play the music from Jeopardy? We have a Fed meeting tomorrow. So now you have to take the common sense part of it. Would any large trader build a large position before a Federal Reserve meeting? Would you put a lot of money at risk right before a time where unknown news can move the market? So that's going to affect how trading is. Now, tomorrow, you're going to get, if you're trading at one of these retail firms like we do, you'll get an email saying that margin rates are up, which is also going to keep a lot of retail traders out of the market. So you'll have less customers coming into the store, which will create slower order flow, right? So if you have some sort of situational awareness of what's going on in the business around you, you can make intelligent business decisions, right? And of course, we'll see what kind of new insult the president can come up with the Federal Reserve. I never thought we'd see that. Oh, goodness. So it's just all common sense discipline. Like, this is not tradable, right? Why would you put your money in this, right? Yeah. There's just no reason, right? This is what we call a pickpocket market. You go long, you get stopped out. You go short, you get stopped out. Because right now, this is a time when it's meant for wholesale to do their business, right? There will be a time when retail does its business, right? When retail does its business is this, the look below and fail, right? Or when you built that short position and then covered. Now there's no business for retail, right? Because we've corrected inventory. We have sellers here. We stop selling here at 31. There's not much to do. And you can't even scalp it back and forth because it's so slow. So go have a coffee, enjoy your morning. Come visit us at thetradingsyndicate.org. I'm JJ. Thank you for joining me. Have a wonderful morning. Trade smart out there. I do the next session at 9 a.m. Eastern Time, which is 2 p.m. UK time, 3 p.m. in Europe. Thanks, folks. We will see you in a few hours. Thanks for joining us. If you have any questions, DM me. I'm around. And thank you for liking and subscribing. I appreciate it. Have a great morning, everyone. Bye for now.